Welcome to the risk mitigation strategy part of due diligence on the destinations deal, which is how Indomitable Horizons Fund investors get to invest in collective destinations. So we call our due diligence process Mural, M-U-R-A-L. M stands for market analysis, U is for underwriting, R is for risk mitigation, which is what we're covering in this video. A is for alignment, L is for legal, M-U-R-A-L spells Mural, and it's all filtering process. The destinations deal, collective destinations, has passed our filter process. So now we're bringing it to you, the investor, for you to decide how much you want to allocate to this opportunity. Through the Indomitable Horizons Fund, we do have a $100,000 minimum, but for investors that want to invest more than $250,000, we have increased rewards for you. All right, legal disclaimer. This presentation is for informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy securities. The investment opportunity is governed by a private placement memorandum, subscription documents, and in compliance with applicable securities laws. The PPM controls in all cases. This offering is made under Regulation D, Rule 506C, and is available to accredited investors only. The risk mitigation pieces that I'm going to cover today is operator performance, natural disasters, what if an operator gets sick or is otherwise unable to continue, black swan events, short-term rental regulations, international exposure, real estate market ups and downs, and construction, what happens if construction runs long. There is more in our risk mitigation plan in the data room. I'm just going to cover kind of the key things that we get asked about. But again, we do have a risk mitigation plan in our data room, and there is more to it. The number one risk mitigation that I look for in every deal that I join or that I invest in is a great team. A great operator can make a bad deal good. A bad operator can make a great deal bad. So let me introduce you to their team. I'm the one in the middle there. My name is Brad Reed. Before I got into investing, I saved Fortune 500 companies $850 million that's documented by solving problems and improving processes using a methodology called Lean Six Sigma. After solving $850 million of problems, I started studying investing in 2010 and really jumped into multifamily in 2023. I currently have $16.9 million as a joint venture or general partner, and that is just of multifamily. But my big contribution to this team is problem solving and process improvement. My co-founder over there to the left, Bijan Rapoor, has 4 years in the U.S. Navy. Thank you to all who serve and have served. Then Bijan had a long career in information technology, and he started his portfolio in multifamily in 2009, and today has quite a nice little portfolio going there. But the real magic to our team is Deanna Lee. She's the one that put this portfolio together. And as far as her experience, this is actually her third portfolio. So Deanna grew up renovating properties with her family, and in the 2000s, she started building a portfolio of long-term rentals. Then when Airbnb became available and she saw the profit potential there, she transitioned her long-term rentals into short-term rentals in the 2010s. And then she wanted to do one step better and saw how to improve it even more, and is on her third portfolio of luxury destination rentals. If you know anything about short-term rentals, you will know that a 4-star review is actually bad. In this day and age, if it's not a 5-star review, it really hurts your performance of operating your short-term rentals. Well, at the time that I put these slides together, Deanna had 782 reviews and averages 4.92 stars. So the point of this team is that we all have different skills that we bring together to lower the risk for ourselves, because we all have money in this one. Everyone on the screen there has personal money invested or assets invested into this deal. But our skill set combines to lower the risk. And again, the best risk mitigation, in my perspective on any investment, is to have a great operating team. That's what we got. One of the most popular questions I get asked is what happens if a property goes down, specifically hurricanes, because we have a couple of beach properties, but fires go in this category as well. We have income replacement insurance. So if one burns down or gets hit by a hurricane, we have insurance that will help us rebuild the asset. But that insurance policy will also replace the income while the asset is coming online. Again, the whole reason that we're told to diversify our investments is so that one disruption doesn't tank the whole thing. So we have a portfolio of properties, 11 different properties, 3 are under construction, but that means 8 are up and running, 3 different countries, 7 different markets. So again, if one property goes down, we have the others that will continue to generate revenue and bring in income to support operations and to provide rewards for the investors. I have seen and get pitched regularly short-term rental investment opportunities, and there's only one property. And not only do those get affected significantly by seasonality, but yeah, if something happens and it goes down, all of the investors are in trouble. One thing that lowers the risk if a property goes down is that there's an entire portfolio here. And again, these properties can work together. So if a property goes down, we can reroute our guests to one of our other operating properties. Right now, we have 3 operational properties in the Caribbean. So if a storm comes through and one is temporarily unavailable, we can take our guests and we can put them in the other property. So the picture in the background there, that's Araya. There's, I think, 11 bungalows, and we may be bringing on one or more online soon. But if Cancun, for instance, becomes unavailable, we can ask our guests, instead of canceling, would they rather stay at Araya in the Dominican, or maybe down in Casa Mariposa in Tulum? So the portfolio works together. If one goes down, we can reroute our guests so that we don't lose that revenue. And we have documented crisis protocols. We have books. We have documents that if a crisis should come about, we have standard operating procedures that we can execute to get everything back up and running again as quickly and as cost effective as possible. So whenever there is an emergency, it's always more challenging to think logically. So we always want to put our logic plans together. This is one of my big rules of investing, is to create your plan before you need it. So again, that's why we have our documented crisis protocols, so that if a property goes down, we can get it back up and running as fast as possible and as cost effective as possible. What happens if a key operator is unable to continue? This has actually happened to me on a deal that I am in as a limited partner. The operator, God bless him, had 2 strokes in a year and has said, I'm not going to do this anymore, and is stepping down. Asked a friend to operate the investment for him, and the friend's like, I don't know how to do this, and it's just plain in an exit. And so I get an email that says, hey, it's over. You can vote to get your money back, or we can turn this over to another operator. But we didn't get any information on the other operator. If you didn't catch me earlier, for me, the operator is the biggest risk mitigation factor. So I voted to get my money back. So did the investors. We're very fortunate to get our money back. But my point is, this one, we have 3 operators and actually 4 principals. I didn't tell you about Nathan Lee on the previous slide, but Nathan is Deanna's husband, and he has over 25 years of building mountain resorts, ski resorts, and he is currently building this glamping. This is a mock-up in the picture right now, but he's building this for us right now. So if any one of us is unable to continue, there are 3 others with experience ready to pick up the torch and to carry our investors to a successful close. We also have documented operating procedures, standard operating procedures. So there's a playbook And if any one of us or a couple of us misses time, there's a playbook, a step of processes ready to execute. And then if for some reason we have to just sell everything right now, we're up 40% in unrealized equity. So for those like me that got in a while back, my investment's already up 40%. And if you have not yet invested, you get the benefit of that 40% bump. So how does that work? It's a $5 million raise. And due to the Glamping Resort getting rezoned from tents to cabins, and the Araya Resort already up and running, no longer under construction, but generating revenue now, the value of the entire portfolio is up from 5 million to a little over 7 million last time we checked the numbers. So that is a huge risk mitigation factor that if you invest today, you get 40% unrealized equity. All right, what happens if another pandemic hits or another black swan event? Well, I'm going to go back to the operator. Deanna managed a portfolio through the 2008 financial crisis and a different portfolio through COVID. Actually, some of these properties Deanna managed through COVID by turning them into long-term rentals. But that is the conversion strategy. So one risk mitigation factor is the experience that we have on the team through events like this, but also short-term rentals can be converted into long-term rentals. And that is what Deanna did through COVID. A lot of Bijan and my investors are very familiar with long-term rentals. So you know what the floor is if we get to do that, if we have to do that on this portfolio. So the revenue decreases, the average daily rate goes down, but the occupancy goes up. But the operating costs go down significantly because we're not doing the cleaning fees. We don't have to have all of the operations that we need to keep the short-term rentals going. The operating costs are lower. So the demands during an epidemic or a black swan event shifts, but they don't disappear. There's still opportunities, and Deanna and Bijan have experience managing through those events. And remember, during COVID, people were fleeing the cities and paying premium prices to live in properties just like this. So, depending on the event, our revenue might decrease, it might not. And remember that all of these black swan events, pandemics, financial crisis, they're temporary. So, if our properties are at least breaking even, which we think is a very strong probability that they can, then we just hold, we survive, we get through it, and then we turn the spigot back on and we adapt, we shift, and we keep going. So this is our risk mitigation strategies in case of a black swan event. All right, what happens if short-term regulations change in a particular market? Remember, we are diversified from Hawaii to the Dominican, from mountains to beaches, from condos to boutique resorts, and all of that provides a risk mitigation if the regulations change. So no single market dominates. The portfolio has a wide variety, and realize that short-term rentals provide a massive income for communities. So if a community where short-term rentals are popular, which is of course where we have positioned ours, where Deanna has positioned these, it's unlikely that they're going to wipe out the short-term rental market because that would be a tremendous blow to the local economy's tax income. So each of these markets were selected for because they are favorable to short-term rental industries. All right, international exposure. This is one that several of my colleagues have been asking question about. Anybody ever gone to the Mexican Riviera, Tulum, Cancun, Playa del Carmen, Cozumel? Have you seen American companies there? Yeah, you have. There are billions of dollars of American companies that have invested in Mexico. Looks like the Dominican is coming up on just a little bit short of $1 billion of American money invested. These economies, these cities, these communities depend on foreign travel and foreign investors. If you traveled shortly after COVID, I know I went to the Caribbean and have visited some of these places. The people were so gracious and they said, thank you for coming back. It was horrible for them because they ran out of income during the pandemic. So while, yeah, there may be some governments and some elections we don't get to vote in, these governments depend on the international tourism and the international investment. And so that lowers the risk as if we were going into a market where American investors are new. We're not new. We're following hundreds of millions of dollars of American capital that's already been invested. And the beauty of that is we can say, hey, what kind of legal structures exist there? What kind of legal structures are other companies using? And then we can copy that. So we have figured out the foreign ownership in Mexico and the Dominican Republic, and we do have our entities set up to operate just like the other American investors have. Again, I talked about how the economies depend on the investment in tourism, and so therefore their legal and regulatory infrastructure exists to protect our investments. And then all of the uh, documents and the structures are based on US dollars denominated, not the local currency. So again, these are the mitigation strategies that lower the risk due to the international exposure. Basically, their economies, their governments need our money invested there. So what if the real estate market turns? Right now, for the commercial real estate market, we are coming out of a recent low due to a lot of properties coming online after COVID. It takes about 3 years to pull the permit and to build a property. And so 2024 and 2025 had an explosion of new properties available, and occupancy went up. And then that means revenue went down. That means valuation went down. Realize on a commercial portfolio like this one, it's the net operating income that drives valuation. So when you hear the real estate market is going down, you need to understand, is that residential? Is that America? Is that the Caribbean? Is that in a certain state because they pass certain laws? What does that mean? Because commercial properties are valued based on the net operating income. So you need to understand what it means if someone says the real estate market is down, because it could have nothing to do with operating commercial real estate. Now, on the chance that the commercial real estate market for luxury destination rentals in each of these markets is down when we want to sell, well, the strategy is to collect cash flow while we wait for the property to come back up. If you've seen the projections, we're looking at upper 20s, maybe lower 30s, depending on how much you're investing, and cash on cash return in years 3, 4, and 5. So if the property value is down and we're getting that cash flow, why not just continue to collect the cash flow and wait for the property to go back up? I know I saw several apartments that were for sale, and the asking price had nothing to do with net operating income. It was incredibly high. And it was exactly what those operators were doing is the risk mitigation strategy that we have here. We can list it for sale, but if the buyer isn't willing to pay the price that we need for the property, we'll just continue to operate it and collect the cash on cash. Again, it's a portfolio in a lot of different markets. And so typically when one market is slow, others may be performing. And we don't have to sell the portfolio as a whole. We certainly can, but we can sell individual properties when their valuations are high and disposition them one by one if we need to, and collecting cash flow until each property is at a value that we want to sell. So real estate market ups and downs, we have our risk mitigation strategy for that. And then the last one I'm going to talk about here, again, the risk mitigation plan in the data room has even more. But what happens if construction runs long? I know a lot of investors have invested in deals that are under construction, and you've run into this risk because if one property, if the investment is one property that's under construction and construction runs long, then your income is delayed. Your distributions are delayed. That affects your returns. And it's just the waterfall effect. Well, realize we have 8 properties right now that are up and running. So the Utah property is under construction. One of the properties in Tulum, the construction's actually done, but there is construction nearby. So we are waiting to bring our property online until it's a nice, quiet, beautiful place to visit. And then the third property, that construction is still going on, but we have not taken ownership yet. And so we're not paying expenses for that one yet. So the construction money is not going to affect future investors because we do have some reserves. The capital draws are tied to milestones, so delays do not trigger additional investor capital, right? We're not going to have to make capital calls just because construction runs long. It's a portfolio, and most of the properties are up and running. The rezoning has already created value, and so once we get it up and going, yeah, it's going to be awesome. And if you look at in the data room, there's a document called the 7-year projections, where we hired an expert, Deanna hired an expert to run some analysis on a portfolio like this because it is very unique. And if you look at that document, even if the glamping resort never comes online and all the other projections are accurate, we can still hit our projected returns. So take a look at that document. Take a look at all the documents in the data room. Ask us questions. Talk to Deanna. Talk to Bijan. Talk to myself. I'm Brad. If you have questions, book a meeting. If you're ready to invest now, scan that QR code. Book a meeting with myself or Bijan. Let's talk, folks. Thank you for watching this video. Again, this is risk mitigation strategies. This is the R of our due diligence method called Mural. M stands for market analysis. Find that video. U is for underwriting. Go seek that video. A is for alignment, which is going to talk about how the investors win if the operators win. And then last is the legal structures to make sure that everything is legal and operational and ready to go. Folks, thanks for watching this video. I look forward to meeting with you soon. And always invest on logic, not on hope. God bless you.